Well, as promised, we are now focusing on Caplin Point. The company reported nearly 11% growth in revenue from a year ago, margin to see slight expansion on a year-on-year basis. Joining us now to discuss more is Vivek Partheeban, COO, Caplin Point Labs. Welcome, Vivek. First up, let's start with your performance as far as the USA market is concerned. How did it perform? Number one, when it came to approvals, what is the drug pipeline looking like? And overall, has there been a bit of a slowdown in the anticipation of tariffs that may come about?
Yeah, so we've had a good year when it comes to the US. In fact, we've grown across all parameters. Even while coming to approvals, I think we've had 8 approvals this year. Pipeline remains robust. We have another 13, 14 products under active review with FDA. So that should come through. Most of it at least should come through in the coming few quarters, which should set the stage for another decent year going forward. At this point, the whole tariff situation is a wait and watch. It hasn't affected us or any other generic companies per se, but we're all waiting to understand what could be the implications. But given the recent noise around big pharma, which is basically branded pharma, it looks like generics is likely to be exempted from any tariffs.
Well, thank you for that, Vivek. This is Vamakshi joining in. Now, just sticking to the US market, right? The company has launched the front-end business in the US recently. How much of this, how much of this business actually contributes to your revenue currently, and what is the plan for scaling it up?
Yeah, at this point, it's very small. The revenues from the front end, I mean, we are literally a few months old in the front end, right? So it's very small, negligible at this point. We are still very much a B2B company at this stage. Having said that, Caplin Point as an entity, we've always been in the front end, whether it's Latin America, whether it's many parts of Africa that we used to be present in. So that's one of the reasons why we wanted to be in control of the marketing end of things, number one. Number two, also with generics, what happens is over a period of time, prices begin to erode. There could be competition coming in. The entry barrier might not be as much as it is in terms of big branded pharma, etc. So we wanted to take all of these into consideration and make sure that we are a little bit ahead of the curve when that happens. So we remain very confident that over a period of time, I don't have an exact number as to how many years, we remain confident that over a period of time, it will be pivoted towards a larger part of our business coming in through our front end compared to what it is right now.
So how large would it be?
Right now, it's almost 95-5. So I would say in the next 4 or 5 years, we hope that for it to be flipped over to 70-30 or something like that.
Understood that. Well, give us a sense of the kind of opportunity that you're seeing, the kind of launch pipeline that you have in Latin America. You have presence both in Mexico, Chile, Brazil. Growth plans over there, and can you quantify these growth plans when it comes to FY26?
Yeah. So we already have a fairly dominant position when it comes to Latin America, especially Central America per se. The next wave of growth should come in from the larger markets like Mexico, Brazil, etc., Chile as well. We are a little bit further ahead, I would say, in Chile and Mexico as well compared to Brazil. Brazil does take a little bit longer, but we are there for the long run. I would say over the next 18 to 24 months, there will be a bit of a gestation period where some of these products that we have filed will start to come out, and then we will need to get into, in at least the interim period, some amount of institutional business before we focus on what we are very good at, which is the private market. So I would say 18 months would be the gestation period for us to start firing on all cylinders when it comes to the newer and larger markets in Latin America.
Sure, and you also received an insulin approval in Central America, right? So what is the plan on the diabetes front? How are you participating in the GLP-1 drug wave?
Yeah, so we've already had a presence in the anti-diabetes range in all of Central America. And so this insulin approval that we've partnered up with another company adds to the portfolio. GLP-1 products, I think almost everybody who has a presence in this institutional space and in this wellness space will have some amount of developments that are going on. We are trying to augment our pipeline in as many ways as possible, and anti-diabetes, anti-weight loss is something that is also part of our overall expansion. I would say sometime by middle towards later part of next year is when we will be launching our product in Latin America.
Vivek, at the end of H1, you had indicated that you have a close to 650 crore to 700 crore Capex plan. This was to mainly augment existing facilities and also to go ahead and set up facilities as far as oncology is concerned. Where are we on that? How much of that is spent? FY26, what is the Capex plan and how will you go ahead and fund your expansion plans?
Yeah, so I'm happy to report that we've completed our Capex for the oncology side. Our oral solid dosages oncology division has been up and running for almost a year now. And the injectable division is going for trials in the next few weeks. So that is completed. The API for general category is also completed. Our oncology API is going on in full steam. Last year, we've invested around 190 crores into Capex. And we envision there to be another 350 to 400 crore over the current year and next year. And we should be done with most of our Capex after that.
Sure, Vivek. And this year you've closed with a margin of almost 33%. What's the guidance for FY26 then?
We remain hopeful that we're at a good place when it comes to margins. In fact, across peers, I think our margins are probably better than most of the people. I would say, the three levers of growth that we have. Number one is the US front end. Number two is the oncology piece. And number three is the entry into larger markets of Latin America. Will start to pick up more steam, I would say, in the next 18 months or so. After that, there is a chance for these numbers to potentially move up a little bit. But at this point, I don't see us, having lesser when it comes to EBITDA or PAT or anything like that going forward.
Understood that. Vivek, lastly, when we're talking about Caplin Steriles, almost 20% of your total revenue now, a 15% growth rate over FY24. You had an important launch in January 2025. What has been the response to that particular launch? And going forward, can you tell us how you see that particular business scaling up? Eventually, what will be the revenue mix going forward?
Yeah, so we've given public statements out that in the next few years, we expect the US business to hit $100 million mark. Hopefully that happens in the next 2 to 3 years. More importantly, I think what we are interested in is to make sure that it's a very profitable 100 million. Even if it takes a little bit longer, we want to make sure that our overall numbers, including Caplin Steriles numbers, continues to be very healthy. And we're not really chasing top line just for the sake of it, So we are at a good space right now. Even in the US business, if you see, our EBITDA is more than 24-25%. And we expect this number to even inch up a little bit more in the coming years. So at this point, the US business is about 20 odd percent. In the next 2 to 3 years, I see this going up to 30% or even more than that.
Sure, and you also have cash on books, 1,180 crores as of Q4, liquid assets of 2,000 crores as of Q3. Plans on M&A?
We're not against it. We're actually, we're always open to something, but it has to be meaningful. We are just about getting done with a bunch of our Capex. We want to make sure that we do enough justice to everything that we've taken on organically before we can look at something inorganic. But absolutely, we're not against it. It has to sort of fit in with our line of growth. It has to be a well-managed acquisition as well. So we're not against it, but nothing to report at this point.
Understood. In case you do sign a check, what will be the likely size of the check? And secondly, what is the trend that you're seeing as far as generic price erosion is concerned? Is it high single digit or has it abated a little bit?
Thankfully, in the injectable space, at least, we have not seen too much of a price erosion more than what has already happened. I would say, by and large, it has stabilized. And in a couple of instances, it's actually inched up a little bit as well. When it comes to acquisition, to be honest with you, we are not going to be against something even a little bit larger compared to what we are doing. So the fact that many people have asked us, why is it that we sit on a large amount of reserves? Number one, organically, we are able to put away 350, 375 crores almost on a yearly basis just from our regular cash flow. So you can imagine that our Latin American business is very robust. Again, when it comes to M&A, it has to be something that really is meaningful towards Caplin. It has to be something that fits in with our line of growth. And if the right opportunity comes up, I don't think we'll be shy to write an even larger check than what many people would even predict for us.
Well, thank you so much for that, Vivek. That was the management of Caplin Point joining in with us. Thank you so much. And we hope to connect with you in the quarters ahead. But, moving on then.